Rivian's Q3 earnings report is finally out and the market had a mixed response to it. So should you buy the stock? Sit tight as we go through the earnings report as well as my chart analysis and price prediction. But before we do that, subscribe to our channel Stox 101 for regular stock market updates. The company missed their revenue target by $14 million, reporting a surprise of a negative 2.61%, and this crashed the stock by 11%. However, the Rivian stock saw a bullish move on 10th November's pre-market, going up by 6% at the time of making this video. Ramping up production at the Illinois factory has cost them a lot, resulting in a $1.74 billion loss in the third quarter, and their loss per share was $1.57, which was better than the analyst projected loss of $1.79 per share. Production, however, is still a major concern as they made 7.3 thousand vehicles in the third quarter and now need to produce 10,000 vehicles in the next quarter in order to hit their target of 25,000 vehicles per year. CEO RJ Scaringe said that Rivian has enough cash to keep operations running until 2025, and in our opinion, if they keep ramping up production and do well with the Mercedes deal, Rivian might make its mark. With all that in mind, let's analyze the charts. So as you guys can see right here, we're now in the 1-day chart for Rivian, and as always, we'll first analyze the 1-day chart, then the 1-hour chart, and to end it off, we'll get to the 5-minute chart. But right off the bat, we can see that we're already in a gap up, which is, well, way massive than what we talked about while making the video, right? Of course, this is like a 14% gap up where we, whereas we already reported a 6% gap up, so that was like 8% less than this, of course, right? This is currently at a price of $32 in the pre-market, and it crashed all the way down to $28 after the earnings report. Now, if we look over here at the earnings report, of course, we can see that the earnings, right, they were a 12% surprise from what was estimated, and the revenue, even though it fell, right, the earnings, and of course, what RJ Scaringe had to say about the stock's future was definitely reassuring, and it worked because as you guys can see, we're already back to the old levels and even, a bit higher than what we were previously trading at. But the real question is this the right time to buy the stock? Well, there are a few things to consider, right? First up, of course, whenever a stock's earnings come out, that's normally not the best time to buy. So why is that so? In my opinion, of course, since this earnings report was good, kinda, right? Not exactly bad, not exactly good. The market gave a mixed reaction, but still considering the fact that we're already up over here, I personally would rather wait for the stock to go down because, well, as you guys can see, we're already in a somewhat of a bearish trend, right? Over here, we're already in a bearish trend, so it was bound to go down. But this, of course, this small pullback is, of course, a sign, or rather, it was just caused by this earnings report and the massive volume that we usually get around earnings reports. So I personally would not think of buying the stock around these dates, right? When earnings reports come out, it's good to buy a stock a few days after, if they have dividends, when they pay out dividends, that's mostly when people start selling. Because of course, the people that wanted to sell the stock usually sell it after they've at least made some dividends out of it. Now, coming back to the other part, of course, the technical analysis, we can see that over here, we did get a few squeezes into this range, but it was followed by, of course, this massive, I would say, bearish trend. And we do have a resistance level over here around $36, which pumped it, right? Of course, we hit around 36.5 over here. We do have a support around $34. We have another, well, what's now a support. This over here is a resistance now. We have another support at 31. Of course, $30 would be a massive level as well psychologically. So let me mark that too. And we made a bottom around here at 27.4. So these are important levels, of course, for positional traders. And another important level is over here. This kind of is the average, of course, where we're gliding right now around $32. Mostly the averages work out like 30, 32, 35, 38, 40, and so on and so forth, right? So of course, if you ask me where the stock is headed, right, that's probably the most important question in your brain right now. So the answer to that is, in my opinion, Rivian, as I already told you, if they pull out their Mercedes deals and other stuff, well, they should be able to go high, right? So if we look over here, we got the first two earnings reports, of course, they were negative, and the next three were all positive, right? They were all green. So that is a good sign, right? It shows us that, of course, the company is headed into the right direction and the CEO is doing the right things. So let me clear out all of these drawings real quick and let's predict what can happen to the stock, right? So for that, we'll have to set a lower and a higher target, an upper target and a lower target. My upper target probably for the stock would be around 42, $44, right? Somewhere, just around the $40 to $45 range. And my lower target would probably be this low that we made around $20. Now, why is this so like, now, of course, this is not a stop loss and target because this is, as you guys can see, very ratioed in my opinion, right? Well, not in my opinion, it actually is very ratioed because this right here equates to the same distance in terms of dollar over here as well, right? So that's a 1-to-1 ratio trade, and it's of course not the smartest choice to do that. Now, if we look over here, right, we can see that we did get some pin bar pressure, and the pin bar candles do work on this stock as well, which indicated this massive gap up. And over here, we can see that we got an insider followed by a red candle. So this might be the indication of another bearish trend. Now, if we get this gap up, of course, where will the market head? In my opinion, it should probably get a small boost to the upside and come down after hitting this resistance either around here at $33 or around $33.5. Right above that, of course, I already gave you other levels, but this is my prediction. I don't really think the stock can go all the way up, right? Because we can see that other stocks, well, the entire market is in the red, right? The market crashed really badly yesterday. And even Tesla, well, Tesla's down to 177. That's bad. Anyways, right, we can see that the stock did crash really bad, but it will not recover so soon, right? Things like this don't happen that easily. So in my opinion, the stock would be probably a buy when it comes below the $30 range again. But to analyze it in more detail, let's quickly jump on into the 1 hour chart. So now that we're in the 1 hour chart, we can see that right off the bat, we made a double bottom at $31.3. So that will be an important level as well, right? If we look over here, we can see that we already got these pin bars followed and descended by inside candles, right? So inside candles are candles that have, well, why did I draw that? I'm sorry for that. Inside candles are basically candles that have really small bodies like this one over here, right? Or this one over here, and they have like really big wicks, right? So these are more on the pin bar side now that I'm zooming in on it, right? Of course, because they have a big wick on one side, a small wick on the other side, and a small body. Same over here. So we can see that this was pretty much just a reversal pattern on the upside, and we did get an upside, of course, as we can see, right? So this, of course, is a, well, what can you call it really? It is a good thing, I would say, right? The earnings report did not exactly crash the stock because we got the earnings report after that in the aftermarket, right? So we did crash in the aftermarket because of the report, and well, we're already above that. But to actually analyze what happened in the pre-market and the aftermarket as well, we'll have to jump onto the 5-minute chart where the real details lie. So as you guys can see right here, we're now in the 5-minute chart for Rivian, and this over here was when we announced the earnings report. And of course, as you guys can see, we did not get all that of a negative response to it. Of course, we did get a negative response over here, and that pretty much was thanks to the market conditions and the fact that, the production numbers were kind of weak. But over here, we can see that, the stock did perform well thanks to the massive earnings jump. And even though, we're already in a loss, but that loss is justified since all of that money is going basically into ramping up production as we already discussed in the previous part of this video. Now, if we look at the pre-market and try to analyze it on basis of the pin bars, or rather simply just the candlestick patterns, we can see that now we seem to have hit pretty much a high around 32.5, right? Will it go further higher? Well, it might, right? If the entire market recovers, then it most definitely will get the strength to recover as well. If the entire market falls, Rivian does not have the strength to go much farther on its on its own. So I believe that we might just hit 33 over 33.5 as a resistance, as I already told you, and then we probably will continue with the bearish trend, right? Now, why is this happening? Let's see, right? First up, of course, inflation numbers, right? The Fed, definitely, that is one of the reasons. And supply chain issues, of course, they were one of the reasons. And Rivian, of course, Rivian is not exactly like other EV stocks that have delayed projects, right? For example, MULN or Lucid. And of course, Rivian might actually come out with a tour of them, their own, like Lucid and MULN are doing. And if that is done, it definitely will impact the stock and its performance in the future. But for now, I personally believe that the stock is currently getting inflated in terms of price and it's not a good buy, right? Not exactly a bad buy, but it's just not the best time to buy the stock, right? I personally would buy once it gets back to this range around $28, which it will, because of course, as I already told you, earnings reports matter in the short term if you know how to trade them, but they won't really make any difference in the long term, right? It will help the stock's fundamentals and financials. Yes, it will, but it won't really help the technical part. On the technical part, you'll just see that, oh wow, earnings report, go up, go down, continue with the trend. In the end, what really matters is the overall trend of that particular stock and the market. So am I saying the stock will go down? Not exactly, but yes, kinda. In the short term, yes. Because of course, as we all know, the markets are suffering. But with that being said, remember that this definitely was not financial advice and you should always do your own research before you trade. If, however, you enjoyed my analysis, be sure to hit the like button. If you did not enjoy it, be sure to hit the dislike button. You can subscribe to our channel Stocks 101 for more such videos. And as always, I will see you guys in the next one.